Welcome to Real Estate and Taxes with Lakshay. I will be helping you minimize your taxes. Good afternoon, everyone. Thank you for joining in on my Tuesday session on real estate and taxes. Today, we're going to be talking about, can social media influencers make money? If they make money, how do they reduce taxes and how does it get reported with the CRA? So today's agenda is we're going to first show how to report social media influencer income, followed by what are the compliance issues. We'll also cover 3 live cases on what is the most frequently asked questions I get from this industry, followed by a conclusion. But before we get into that, let's define what social media influencer means and how do we capture this income. Well, let's assume I have a TikTok account, I have an Instagram account or a YouTube account, and there's a brand that reaches out to me because I have a lot of followers to feature a product. If I do that advertisement, I will get paid from that brand. This is technically the category of income that I'm talking about today. All of the people who are in the industry of social media influencing, they technically capture this income on their T2125. It is considered as self-employment income, and anyone who is earning more than 30,000, they also need to capture HST on it, which we'll get into details later on. But what are some of the examples of social media influencer income? It is brand deals, affiliate marketing, tips and gifts from followers, as well as sponsorships that you get from different types of brands. All of these captured can be reported on the CRA, and CRA is very particular that you cannot skip out on reporting any of these types of income. So as a social media influencer, what is your tax deadline? Well, typically personal taxes are filed by April 30th and need to be paid by April 30th. But if you're a social media influencer, you're technically considered self-employed. And for self-employed, you can file it by June 15th. But don't get confused. You still have to pay by April 30th if you have any tax owing. And if your tax owing is more than 3,000, you should technically be paying quarterly installments throughout the year to pay your tax dues by time. One of the other things that you need to keep in mind is GST HST registration. Most of the time, social media influencer income is side hustle income, and that side hustle does not reach more than 30,000 for throughout the year. If it's less than 30,000, you're okay. You don't have to collect HST and you don't have to file HST. As soon as you pass $30,000 of income, you definitely need to start collecting HST, and you also have to do HST filing. But don't be concerned, you can also write off all of the HST that you have collected against HST paid on different types of products that you have bought or services you have used in order to complete this whole sales cycle. So what are some of the typical tax deductions social media influencers should keep in track? There are 4 typical categories of expenses that I wanted to highlight today. The first and foremost is home office deductions. If let's assume you're operating from home, you are technically using a home-based office where 90 square foot out of 1,000 square foot condominium is being used. So if you divide 90 by 1,000, you're going to get a percentage. That percentage can be used to track your home office deductions. The second deduction I wanted to highlight is equipment. A lot of the time you have to get cameras, lighting, mics, different types of furniture and fixture. All of this can technically be deducted against your income as an influencer and can help you reduce your taxes. Number 3 is professional services. Any accounting fees and legal fees that you pay to file your taxes and manage your books is actually a deductible item, so don't forget to claim this as well. Last but not the least, advertising and marketing. Any type of fees that you have been paying, fees related to any type of social media channels, paid ads on TikTok, on Facebook, Meta, all of this is actually deductible. So definitely use these as well. All of these 4 items to reduce your taxes to the max. Now that we have understood the income, the expenses, let's look at the top 3 commonly asked questions that I get as an accountant during the tax season. So case number 1 is people ask, if I am getting some sort of a hoodie, makeup, or any type of product from a brand to my home, do I count that as an income because I didn't really get any monetary value from it? Well, the answer is yes. If you're getting any non-monetary item from any of the brand and you are technically creating a win-win situation by putting up on social media and basically advertising it, CRA looks at it very carefully. They want you to report the fair market value of that makeup product or a hoodie or whatever it might be on your taxes and pay taxes on it. Now let's look at case number 2. A lot of people ask me, can I claim my pet as a dependent, or can I claim the cost of, having a pet on my taxes? Well, the simple answer is no. But if your pet is being used as a social media account holder or social media influencer, they can technically be used for gaining income. So if they're helping you gain income, then you can technically write off expenses used to earn that business income. Case number 3 that I get asked the most is, technically, if I have an account on YouTube, Meta, and I'm getting sales from the US, I've crossed the 30,000 ballpark, should I be collecting HST from my US customers? Well, the answer is no. Because it is an export of services, HST is only applicable to Canada-wide as well as different provinces. But if you're doing something outside of Canada, you don't necessarily have to collect HST. So you basically need to split your sales in line number 90, which is technically taxable sales, and box number 91, which is exempt supplies to the US. So both of this combined will be total sales, but the US one can be segregated in line 91 and the Canadian one can be in box number 90. So overall, I hope you had a good understanding now how to report your influencer marketing income on your personal taxes. Here are a few key takeaways that I want you to leave with. Number 1 is, in order to minimize your taxes, you should consider incorporating your business. Personal taxes rate at the lowest bracket is 20%. On the business side, if you're trying to do a corporation, it's only 12.2% on first 500,000 of income. So the choice is yours. You can either pay more taxes under sole proprietor, or you can minimize it under the corporation model. The second thing I want you to identify is retirement. All of these savings plans and RSPs, they diminish if you're a self-employed. So if you're self-employed in the social media marketing agency or social media influencer getting paid commissions, you're technically not contributing anything to your retirement plan. So what you should be doing is parking some money away, explore with your financial advisor the FHSA, RRSP, and TFSA, and maximize them in order to minimize your taxes. Last but not the least is make quarterly tax payments. A lot of the time people forget that they're getting paid the full amount in their account without any deductions, and they're still liable to pay federal income taxes. So at the end of the year, when they pay a one lump sum, if it's over $3,000, there's interest and penalties. What I advise is, if you think your taxes are more than $3,000, you should be paying quarterly tax installments, and this way you don't have to pay any penalties or interest on outstanding taxes. With that, we'll wrap up today's presentation. Thank you very much for joining. We'll see you next week on Tuesday at 2 p.m.